there and welcome. I'm Zunaira Saieed.
And I'm T. Lindsay.
And this is Money Today. Now in today's episode, we will be discussing about exploration and production stocks, as Malaysia barely has any of these stocks in its exchange except for Hibiscus Petroleum. Now Reach Energy could be the second full-fledged E&P player listed on Bursa Malaysia.
That's right. Now, Reach Energy Managing Director Shahul Hamid says that E&P stocks have high value because of skilled professionals and high technology. Let's have a listen and see what he's got to say.
We looked at 40 over assets in the last 2 years after our IPO, and this asset ranked top of those 40 candidates we looked at, and is a very good asset of high value. It's onshore, easy to operate, closer to infrastructure, is a concession regime, the best regime in the so-called petroleum fiscal regime. I hope our shareholders also support me in this respect. In fact, I'm doing a national service.
National service to the country. I must say, Lindsay, I am impressed with what he has said. Another thing is, it brings also a question in mind whether Reach Energy could actually convince its shareholders for voting a yes for this. But then there is a twist again, that a new shareholder might come in and buy 20% stake of the yield investors.
So with this new investor coming in, now that would be a game changer for Reach then. The other thing which people have forgot to mention is that Reach has a great asset. It's earnings accretive, so if you were to vote yes in November, you're going to see earnings in the first quarter of 2017 itself.
But then there is also another important thing to note. Why is it that when SPACs actually look out for these viable assets, it is so difficult for them when the oil prices have fallen, and then you also have the oil and gas assets that have also fallen in tandem?
You are right. However, Reach bought the asset at a very good price. I think they paid US $155 million for it, and they bought it when oil prices were already low. So in actual fact, they're only buying at oil prices of US $3 per barrel. Anything below US $10 is always good value. So I think Reach was a bit lucky because oil prices have dropped so much since June 2014.
Right, now there is a fighting chance for Reach Energy. Now moving forward to marketplace, oil prices have rallied since the September OPEC meeting, but there is skepticism on whether the cartel members will stick to the production cut. Let's take a look at what OCBC's commodity economist Barnabas Gan had to say about this.
There is some form of skepticism over the OPEC oil deal, meaning so there's some loopholes. First and foremost would be the absence of Iran in the oil deal. Given Iran, Nigeria and Libya together, they actually command about 1/4 of total OPEC production. In the short term, I think given the fact that there is a lack of bearish indicators, and also markets are still pushing prices higher. But I think more importantly into late October, before the OPEC meeting in the 30th of November, prices may take a dip again below the $50 handle. Could be it could find support at 45, but it should take a dip from current levels. So what I'm trying to say is that the rally in crude oil prices will be short-lived, even though there's an OPEC meeting.
Well, it is definitely hard to gauge whether the OPEC meeting has been effective, Lindsay. Now we have to see how the oil prices behave from now until the next OPEC meeting on November 30th.
You're right. To be honest, I don't think oil prices are going to strengthen very much over the foreseeable future. And if that continues to happen, that means earnings and returns are going to continue being weak. Why do I think that? Okay, first of all, I think countries like Venezuela, which are cash-strapped, they're still going to continue pumping oil. And let's not forget shale oil in the US. Production has risen a lot. As of June, they produced about 8.7 million barrels of oil per day. That's just like a 10% reduction from their 2014 peak.
Right, but then there are also still chances of crude oil prices strengthening due to the winters coming in the US in December. So coupled with that and the OPEC meeting that's going to be in November 30th, there are still chances that crude oil prices can rally at the end of the year.
Well, you're right, Zunaira, but don't forget that oil price was at a low of about in the 20s early in January. So it's actually rallied by some 50% at its current price of $50. But having said that, energy oil stocks have been decimated, and I do think it's a good time to look at them.
Yes, the rallying of the crude oil prices could come in handy as Malaysia is the exporter of oil.
That's right.
Now that's a wrap for today. I'm Zunaira Saieed.
And I'm T. Lindsay.
Take care, bye-bye.
Bye!